Hello everyone, good afternoon and welcome to today's Trading the Markets Live. Now today is Tuesday the 17th of July already, so these months are really ticking by pretty quickly. So without further ado, this is the trading session where we look to capitalize on some high probability trades during the US Open. Now that I've been able to get that particular sentence out, let's get on and begin this trading session. So, before we begin, please do take a brief moment to familiarize yourselves with the risks involved in trading these financial markets. The details are currently there up on screen. Now, before we begin, what we like to do is to just share some of the news flow with you to see if there's any opportunities or any news flow or major news events that can impact some of the trades we're looking to take advantage of during the session. So, without further ado, let's get up our trading platform and our news website, which is Forex Factory. So from here we can get a good snapshot, an interesting overview in terms of the news events that could impact either the trades we're in or perhaps even the trades we're about to take. Now, as we look through the news events, you can see there's a few really. There's 2 or 3 basically for the remainder of the trading day. We've had on most of the news already for the day. A lot of it impacting the British pound. But let's really focus on the dollar. The 2 events, 2:15, we have some medium impact news events may potentially impact the US dollar if we get a significant deviation from the expected. So we're talking about capacity utilization rate of 78.4%. And the industrial production, which is a monthly figure of 0.5. So one of the reasons why we like Forex Factories, you get a really nice snapshot of each of these news events. So do feel free to have a read through that. So the significant news for the day would without doubt be the chair of the Fed actually due to testify, and the reason why that's so important is because the markets will be taking a very keen interest in terms of potential future monetary policy rate decisions. So if he adopts a pretty hawkish approach to the US economy and to the potential for increasing interest rates, then we're likely to see the value of the US dollar push to the upside. And if the opposite happens, if he actually has more of a dovish approach towards interest rates and slightly negative output, a slightly negative outlook of the US economy, then it's likely to impact the US dollar adversely. So we just need to bear that in mind. It is a significant news event, so we will be trading during that event, and we'll see. I suppose the reality of this particular news event here is more down to the fact that he'll be asked a series of questions, and the nature of those questions are thought to be unknown. So he really doesn't really know fully what he's going to get asked, and therefore that's why the markets are quite interested, and that's why it could literally be a bit of a volatile event. So we do need to be aware of that if we're looking to trade the US dollar. So let's get straight into the charts then, and we'll see what opportunities may exist. So for this, we'll get up our trading platform, and one thing that's sort of been quite interesting is the bit of a turnaround that we've seen in the US dollar fairly recently across the board. So we had the dollar strength weakening for the majority of the trading day, and we've had a pretty significant turnaround. And as we flick through these remaining charts, you can see now that there is a significant amount of strength coming back in to these dollar pairs. So we're getting sell-offs in the Aussie, and we've already mitigated 50% of the move in the New Zealand dollar as well. So across the board, we would be looking for some opportunities regarding dollar strength. So just before I go into those in a bit more detail, I just want to share with you some of the explosive moves we've seen. And we've seen a lot of European strength come into the markets today, whether it's the euro dollar initially, the euro pound, and also the euro yen, even though this is currently pulling back to these previous levels. So if we look at it on a daily time frame, for example, we are still edging higher even in this market as things stand. So we'll have a look at European continued strength for this session as well. Now we've had the pound yen just pull back slightly off these highs, but it's likely to pull back to these levels of support around the 147.77. So just doesn't really represent a viable option for us as things stand. Now, one of the markets we're very, very interested in is looking for opportunities to sell the gold market to the downside. So we can see that this price has now broken the 12.37. We're now down at 12.31. And we do anticipate this market to continue lower. It's got plenty more growth to the downside in the gold market. So we'll have a look at this, but what we want to do is we've clearly missed the move, so we want to look and be very careful for some opportunities in the gold market down at these lows. We've seen this move literally in the last 30 minutes. However, you could argue, the last 2 hours have been, in fact, more than that. We're taking approximately the last 3 hours or so has seen this market just ever so slightly roll over to the downside. That is very much in tandem with the move that we're seeing in the dollar. So that reversal in the US dollar, where the dollar has strengthened quite considerably, it's had the correlated impact on the selling of the gold market, and this market is just seamlessly just cruised to the downside. So now we just need to be careful, wait for those opportunities to maybe continue to take this market further to the downside. So we're definitely going to have a look at the gold market. Looking at crude oil, we're getting extension below this level, which is quite interesting for us. So we're definitely going to have a look at trading crude oil for the session as well. We could be looking for a breakout of these lows, and we're just below that level as things stand. So we'll come back to that again very shortly. The S&P is just selling off these highs, threatening like this market's going to push lower. So we would like to look for opportunities to potentially go with this market and look to buy rather than look to sell. Again, indecision in the Dow Jones market, and also as well in the Nasdaq. So what we're seeing as well in the US 100, which is the Nasdaq market, is just this market just coming off those highs and just looking like we're getting that pullback phase. So what we're going to do is we're going to look to trade, we're going to look to sell both the gold market and the oil markets to the downside during the session. And in addition to that, the euro has been particularly strong. We are getting a bit more of an extension in the pound. The pound has been particularly weak today. There is the potential to buy if we get a close above the dollar yen. There's quite a few potential opportunities also in the CAD, in the dollar CAD market above yesterday's high, and the Swiss is pulling back off its lows. But when we look at these markets, we can certainly identify the selling coming into the Aussie dollar below these lows here. So there's two markets we're going to look at. So looking for an opportunity to sell the Aussie dollar, and also looking for an opportunity to continue to sell the pound dollar. So that's what we're going to do. So we're going to first of all put these into a bit of an order on the screen. We'd like the Aussie dollar as well. So we'll put the Aussie dollar bottom left as we look at this screen. Okay, and then moving along, we're going to keep an eye on the rest of these markets, but certainly continue to look at this market here, bottom left. Sorry, bottom right, should I say. And then finally, crude oil. We're just in this place here as things stand. Okay, so so these are the four markets we're going to focus on. A little bit of dollar strength, which is playing out as well in the breakout that we've just experienced in the gold market, and we are seeing the crude oil market continue lower as well. So we're going to have a look at these one at a time. So focusing first of all in the pound, and the reason why we're looking to sell it is we're wanting to go with this market to the downside. And I'm just going to get up just our pen there, currently up on screen, so just give me a few seconds. So we are fundamentally in this downward trend in the gold market and the pound dollar market, and you can see that there's a bit of resistance at these levels preventing prices from pushing higher. So we are wanting to continue this move and continue to look for opportunities to sell. Now we can see a nice yesterday, a really strong rejection candlestick to the upside, so really a breakout beneath the daily lows was probably the high probability trade setup for us, and we're seeing these markets continue over to the downside. So we're seeing this market move lower. So let's go into the smaller term time frames then, and this is the general approach that we adopt, especially when we're trading intraday opportunities. We can see that this market has completely rolled over. Certainly if we take a note of yesterday's lows, which just sit in here. So we had the market trying to thrush higher, it failed to do so, and then we got a really strong structural move to the downside over the last few hours. Now we're currently waiting to experience the pullback. So if we get a pullback in and around the 31.82 level, we would certainly be looking to sell from this level. We do have a little bit of sort of choppy price action. It's pushing higher, it's extending lower, it's making new highs, it's trying to continue to make new lows. So it is pretty choppy, but if we do get a pullback to this level, then we will look to take an opportunity to the downside. There can be a little bit of a range in here actually between these levels. So if we get a little bit of a pulse to the upside, sort of 6, 8, 10 pips to the upside, and we get little turnaround, bit of price action, then we'll look to sell it from this level. And the other level to sort of the higher probability trade is without a doubt the 32.16 level, just up at these levels up here. So we can go in and we can have a good look at this, perhaps even on a 5-minute time frame. See when we get the exhaustion, and then do we get the extension further to the downside. If so, we can then make the assessment whether it's tradable or not for us. So let's continue to have a look at this market. I'll zoom in a little bit more for you. So we've now pulled back, a little bit of indecision at these levels, and it's looking like we're going to be extending lower on a 5-minute chart. So we'll keep a close eye on that one. So same sort of setup really. The Aussie dollar, we are interested in selling this market below the 74.09. So now we need to go and see, do we actually get that opportunity to do that, or is it going to be quite choppy price action? And we're quite happy to look for opportunities to sell. The ideal level, if we want to capitalize on a pullback, for us that level would be the 74.02 level. So we're quite happy to be nice and patient, wait for this market to pull back to these previous levels of support, which becomes resistance, and we'll look to sell off that level. So that's the basic principles of, and we'll look at it on a 5-minute time frame as well. That's the basic principle of trading price action, and certainly looking for support and resistance when you do that. Okay, so let's go into the US oil and just see what the overall picture is. And we've had a strong move back, so now we need to be nice and patient, wait for the pullback to the 67.59, and maybe look to sell off those levels if we get the right kind of setup again, we'll go to the 5-minute time frame and we'll keep a close eye on that particular level. No. Sorry, this is the level we're looking for. So the final, the last trade we're going to look at for the session. We've had a really strong move there over the last few hours. Looks like we've created a bit of a low around the 1230 level. Let's zoom back and see what's been going on with this market. This is the largest low that we've seen, the lowest price for the gold market for quite some time. We'd need to go back to July. In fact, very nearly exactly 1 year ago, which was the time at which we were back at these prices. So that's quite interesting, and we're getting this rollover to the downside. So we want to go with the market, which is clearly to the downside. We've seen our structural failures and everything we need to see in this market. So that's the daily time frame. Let's go down to the 15-minute. We've seen the nice strong move lower, so we know that the breakout has already occurred. And now we're going to wait and be nice and patient and wait for that opportunity to sell the pullback. Now we do have a bit of a range between 1236 and 1237, so now we actually need this market to pull back, which is obviously the patient side of trading these markets, and that's what we need to focus on when we trade. So so knowing when to enter and when to be patient is obviously a very, very important skill for traders to learn. And hopefully the longer you're with us as well, the easier that process becomes. So so what we're looking to do is we're looking at this area very, very closely, and we're anticipating this market to continue to the downside. We'd like the Aussie dollar potentially pull back a little bit, but it's just coming to these levels over here, and it looks like we're getting a bit of the rollover to the downside. So we'll take a note of this, and we do expect this market to continue lower from these levels, and let's see if we get that opportunity or not. So we're just currently getting this rollover bit of price action, so we're going to look at this market in a bit more detail. Do we get our structural failure to the downside? No, we don't. We're just currently getting a pullback off these highs. We're getting the pullback. So it's that next extension to the upside that could potentially give us the bit of a rollover to the downside. So we'll continue to monitor this perhaps on a 1 minute time frame. I'll take these off. So clearly some strength is coming into the US dollar. We do have the Fed chair due to testify now in about 20 minutes. So we still need the price action to conform to what we want it to do. And as things stand, we're not quite getting that full opportunity just yet. But we're not too far away from it. So when you get these turnarounds at these prices, then that's quite important. So that's the Aussie dollar. So really, when we trade these markets, we absolutely want the markets to come to us. We don't ever want to go chasing these markets. And what I mean by that is sort of jumping into them without due care and attention for the actual setup and the prices to actually get in and get out of these markets. So and if it conforms, then we trade it, and if it doesn't conform, then we don't. Some days we could be in 3, 4, 5, 6 trades a day. Some days we might be in 1. So we've got to trade the setup and not necessarily the kind of the current situation. So we do want to be consistent when we trade these markets. We talk about it a lot. And if we go into this level here, you see if this pushed back just an extra 3 or 4 pips back to this level, we could have been in this to the downside. But from a pip perspective, we're still, it has kind of moved, as you can see, but we are still effectively 8-9 pips away from these highs. So we just wanted it to just conform a little bit better for us. So when you look at it, you get a slightly different picture here now on a 1 minute time frame, where you're getting this little move to the upside and to the downside. Could even bring that down just a fraction. And we are now getting that explosive move to the downside. How much scope does this market have to the downside? We obviously don't know. We could look at this candlestick here and suggest potentially a lot more, or we could look at many of these candlesticks and looking at the range of some of these as well, the difference between the highs and the lows. We're talking about 100 pips, and currently we have moved between the high and the low 40-50 pips. So it could be argued there could be the best part of another 40 to 50 pips available in this trade. Going back to the 1 minute time frame, looking at these levels, we're getting this extension lower. So now this level, which was previously support, can become resistance. So we are seeing this market continue to move lower, even though we've got the close beneath this level, which is the 73.93 level, which is quite important. So if we get a little bit of a pullback in this market, we will look to sell and look to place a stop loss just above these highs. And let's see if we do get that opportunity. So we might still get that opportunity there and as I say that, it just looks like we're going to flush lower. So what we're going to do is exercise a little bit of patience and wait for those pullbacks to occur in a way in which we are comfortable trading them. So for example, looking to sell the 73.93 level, if we get a pullback to that level, might be worth looking at. It'd give us a fairly small 7 or 8 pip stop loss on that market. We still want the pound dollar to pull back actually a little bit higher if we get that opportunity. That would be the better area to look to sell. We're getting crude oil just extending further lower. No major surprise. There's this contrast between supply to the upside and to the downside. So we need to take that on board as well. So we're seeing the markets initially squeeze up to the oil market, that is the crude oil, squeezing up to sort of $74, $75 a barrel, and now we're at 67. So as you can imagine, that's a very significant 10-12% devaluation in the price of US oil, literally over a few days. And to share that with you, so now we're getting the pullback that we would like to see. And maybe look to sell this market at a slightly higher price. Same at the moment with the pound dollar. Now the level that becomes interesting for us now when we trade the pound dollar is this level here, because if we fail to make a new high and we get this rollover, then we get what's called a nice sort of structural failure. If we get to see this, then now this could be the beginning of the next leg to the downside. So we're just biding our time, being very, very patient with these markets. Wait for the opportunity for the US oil to pull back, and if we get an opportunity around this level, we'll look to sell it further more to the downside. We can see now here for the last 20 minutes that we're in a bit of a sideways moving pattern. So we'll go down and have a look we'll have a good look at this price action in a little bit of a smaller time frame. And we're currently getting, we've got the pullback, we've got the resistance. So I'm quite happy if we get just a break beneath this daily low, and we get a kind of so that's an interesting close on that. We've still got indecision. It's not really sure whether it's going to break to the upside or to the downside. So we want to be very careful. We have our plans in place. We know the types of trades that we're looking for. Hello, Scott. Welcome. Thanks for joining us as always. Are you trading anything at the minute, Scott? If so, do let us know. We're currently looking for some opportunities here in the pound dollar. We're getting hopefully the pullback to this range in here, the 31.79 and the 31.72 level. We're getting this sideways moving pattern in the gold market. So what I'll do is I'll just remove, I'm keeping a close eye on the Aussie dollar as well. So let me take off some of these. So I'll take off some of these scribbles. We're watching this price action very, very carefully. Sorry, let me take that away. And let's go into these on a no, I'm going to start actually with the gold market, just because the opportunity could be better for us. So look at what we're seeing. We're seeing on an intraday basis, we're seeing the market struggle to break below the 1231 to the downside, and also we're seeing it struggle to break the 132.32 level to the upside. So a really tight range in there. So let's continue to monitor that very, very carefully. And let's see what's going on here with the 1 minute time frame. So there we go. So yes, we are getting that rollover, but it's not great price action for us really. So we'd still like this market to pull back to the 67.59 level. Yeah, and that coincides with yesterday's low. So that's why we have this level. If I look at it in 15-minute time frame, you'll be able to see it a bit easier. You can see that yes, that is yesterday's low. Really strong breakout to the downside. And then we got some sideways moving price action, as we always get when we trade these markets, and then we get the flush lower. Now what we're waiting for is a bit of a pullback to the 67.59 level, and we'll look to sell this level to the downside as well. So now we're back to this level. We now just want to see if we can practice our timing and get our timing right for this trade. So let's convert the gold market. We really need to just monitor the 1 minute time frame and just wait for those opportunities. So if it flushes lower, we just need to let it go. We don't necessarily want to be selling sort of choppy price action like this, where if we trade the breakout, that's fine. But what we don't necessarily want to do is just sell the market at any price. We want to try and stack the odds in our favor when we trade these markets, and we're just getting the move off this low, and I just want to see if we get a close beneath that level, the 73.90 level. We can look at selling this market. So when it comes to trade size, when it comes to trade size, we've already pre-prepared exactly what our trade size is for each market that we look to trade. So we look to trade pretty much 15 liquid global markets on a daily basis, and because of that, we have a good understanding in terms of the size we should be trading for the amount of capital we have available. We've got lots of resources available on our website as well. For those of you that would like to have a look at our website, please click on the link below. We're also currently offering a 14-day free trial to all of our live trade rooms and our education. For those of you that do want a comprehensive education in trading these financial markets, largely from a technical perspective, although we do understand the importance of fundamental analysis and understanding the fundamentals and how they impact these markets, and some of the finer nuances that you'll experience when you trade. So it's really about having a process in which you will look to stack those odds in your favor, and hopefully I'll have the opportunity to show you a few of those opportunities very shortly. There's a bit of a structural failure occurring potentially in the pound dollar to the downside. We're getting this sideways moving pattern in the Aussie dollar. So what that's saying to us is a little bit of patience is required for now. We want to be very patient and wait for the pullback in the US oil. We don't necessarily want to get into this market at these lows, and we're currently consolidating in gold as well, as you can see, for quite some time now. So we're range bound between the 1232 and the 1231 to the downside. Scott, you're saying you're looking at buying the euro yen. That absolutely was a call of ours as well this morning, earlier this morning. So let me get up the euro yen chart and we'll just see. And we've got the level marked currently up there, Scott, as well. It's just a breakout above yesterday's high, the 131.70 level. We're getting this extended market pushing higher. The 131.70 level. So we'll keep a close eye on that. Now, we'd still expect this market to continue higher. There's a couple of bits of useful analysis which if I just zoom out, we're currently seeing a bit of yen weakness really since sort of mid 2016, and although we get these pullbacks, really the move is looking like it's going to continue to the upside. Now, we did have a shakeout of that approach not so long ago, which these levels provided consistent opportunities to buy off that level until we got the breakout to the downside where the price actually bounced back to the 125.28. But what we've seen very recently is a breakout, and the important level here, I'll zoom in a little bit more detail for you. The important level to note is the 130.40 level. Now, that is a structural failure to the upside. So from that point onwards, we were absolutely looking for opportunities for this market to push higher. However, we very well may run into resistance at these higher levels. So we are expecting the market to squeeze higher. We're actually in this on a longer term time frame from the sort of 129, 130 level, just in here, and we're doing well with the trade so far, but we do want to see continuation just a little bit higher. But we're not going to be holding out for 134, 135, anything like that. We want to perhaps book in profit on the first trade, and then if we get a pullback back to 130, we'll look to take it again at a lower time to maybe then start approaching the 134, 35 levels. So we have quite a solid trade plan, let's say, for the euro yen. So so that's the euro yen. We'll see how some of these markets are getting on. So we're threatening to break this low here, so we can go ahead and sell the Aussie dollar if we just get a little squeeze below, because what we want to see is the consolidation. So we want to see the break, which we've seen. We want to see the pullback, which we've seen, even though we're talking about a small number of pips. We want to see the consolidation in between these levels, and then we want to see the next breakout to the downside, and that's what we're looking to trade, purely from a price action perspective. So now we're getting the pullback to the level that we would like to trade this market. So now we're looking for the opportunity to get into the downside. So I'm quite comfortable that we've virtually bounced back to the 67.59, although we're getting a bit of a reversal now, as you can see. So this market is just closing above that level for the first time in approximately half an hour, 35 minutes, and we're getting a little bit of bullish price action coming in. So really the sell trade can just remain on the shelf just for now, and it's a way of capital protection as well. So now we're getting this move, and we'll go ahead and take that trade to the downside. And what we're going to do is expect this market to continue lower, but we're going to and we want to make sure we trade the correct size with some of these markets, and of course always look to fix our stop loss. So I'm happy to place what is an 11 pip stop loss in this market, and I'll just double check it. So it's just above these highs in here. 10 pip stop loss in the Aussie dollar. So all we're wanting to do is to go in line with the market and see if we get that, what I alluded to at the beginning, that extra 30-40 pip move potential to the downside is what we're looking to trade. So we're not looking for 60-70 pips in this trade. We're looking for just a flush lower, maybe 2 or 3 times our risk on the trade to the downside, and we'd gladly sort of book profit at that point. So we've seen a strong rejection actually in the gold market beneath the lows, and now it's looking like it's going to give us this opportunity to squeeze below. So actually that's what we're looking to do. We're looking to sell the market. Will we get a close below the 12.31? Which just look like that's exactly what we're going to get now. But we're going to be nice and patient, wait for the opportunity. We might get into all of these trades now very shortly. They're all looking like they're beginning to stack up for us. We want to see the consolidation and the close beneath the level. So we want to see this price close beneath the 12.31. It's a form of capital preservation as well, getting the confirmation that we need to take this market to the downside. So what we want to see in the oil market is either some continued consolidation for a little bit longer, creating a bit of a floor in this market. We're getting a strong reversal now. And when I mean strong, that's not, we're still in consolidation as well. So it's not like we're looking at this and seeing like a structural failure and these prices pushing higher and things like that. So I'm happy to go ahead and sell this low just in here. If this market just rolls over just beneath that daily low, one more move to the downside and we're in. it's pretty reluctant to do so, isn't it? Okay, so interesting if this causes a little bit of indecision. Okay, so we're getting pullback off that low. So we're getting the Aussie dollar extending lower. We're still waiting for, which it looks like now it's beginning to close beneath that level. No, quick turnaround. We're getting the pullback in the oil. Okay, we're getting a strong pullback now, and it just coincides with so this little move here coincides with testimony from the Fed chair. Getting quite a strong reversal off that now. So this is the volatility we were alluding to at the very outset, when any central banker is in front of a select committee being grilled and asked questions about their approach and their outlook and some of the data that they've gathered and the decisions that they've made and how they arrived at those decisions. It's all very, very interesting stuff for the markets, because the markets are trying to work out what is an economy's approach to interest rates. Are they hawkish or are they dovish? You might have heard those terms before. If a central banker is hawkish, it means they've got a biasness to increase interest rates. If they're dovish, then they've got a biasness to they're slightly biased towards decreasing interest rates, and that has a phenomenal impact on the performance of an economy, and also, I suppose, from just a living cost perspective, it has a really strong impact on what we pay for goods and services. Just to name but a few. Also, repaying of debt and interest rates and all that kind of stuff. It's all very, very important. So what we're seeing is a really strong reversal off these lows. As soon as probably the Fed chair sat down, the dollar has sold off just a little bit. A good indicator of that movement would be the euro dollar. We've probably not seen an awful lot in this, but just in the last 5 minutes or last few minutes, just a strong reversal off these lows. So we had been continuing lower. So interesting bit of price action there, just on the testimony of the Fed chair. So it looks like we'll take a 10 pip loss in the Aussie dollar. It's just pulling back, and it's pulling back quite aggressively as well. And a lot of this is the intraday volatility which we experience during significant news events. And there's currently a significant news event. Now we're quite happy to take the risk, because this market could easily turn around and it could move 30-40 pips lower. That's why we've got our stop loss just above a significant level of resistance. But let's see if that resistance holds, because it looks like we're gonna be looking to reverse a little bit. But we've only actually pulled back probably 10 pips off the lows, so this is by no means is unusual. The pace of it is a little bit, you can tell that there's a bit of volatility in the market right now. We're creating an M formation, which is kind of a double top, which means a break below the 67.38 would be a great opportunity to take this market lower. And we're coming off these highs. So now it just seems, you know, with the gold market, for example, is this level now going to become a level of support? And are we going to get structural failures now to the upside in this market? So this is the big question we're going to ask ourselves when we trade these markets now. Okay, so we're just looking at and just seeing what's going on really. We've had a bit of a shakeout in some of these markets with the anticipation for these markets to reverse and start pushing higher, and then we've had a pretty strong reversal now in the $2 market. So we're still in that period of questioning and putting really a question mark really in our minds. So of course we want to see the Aussie dollar extend lower, but if this becomes a high now and we get a structural failure breaking above the 73.98 level, then it will also be a structural failure to the upside. So it's just important to know what's happening and waiting for those opportunities to present themselves. This level here represents a structural failure, preventing prices from pushing higher. So we'll see if we get that closed below the 67.38. So if we get a close below that level, we'll absolutely look to sell US oil. We're currently getting that move. So So that's the bigger picture. We do want to sell this market to the downside. We'd prefer a bit of a pullback and then sell it, if we possibly can. It's not so much the pullback of these highs, it's what happens next. So with both of these markets, do we break these new highs, in which case it would be a strong structural failure and we'll start seeing multiple structural failures across the board. Same with the gold market. Do we extend up above the 1234 level and then break cleanly above that level and we're kind of off to the upside? Same situation in the US oil. So what we now want to see as far as the Aussie dollar is concerned is we've had a pullback off the low. We've extended to the downside roughly around the 73.90 level. We've pulled back, created a lower high, and now we want to see the 73.90 level be broke again, and then that means we're quite comfortable to continue in this market to the downside once more. And let's see if we get that follow through. So either way from here, if we push higher, it's a structural failure to the upside. If we push below the 73.90 level to the downside, it is regarded as a structural failure, and we'd like to keep selling this market as well. So it's just understanding the dynamics of exactly what is happening. So now we'll see the real interpretation of Fed Chair's comments. As he testifies, you'll start seeing potentially the markets move in the direction in which he is probably, in terms of his opinion, perhaps towards interest rate increases or the pace of those increases, as to whether he's kind of got a hawkish approach or a dovish approach. So we should start seeing a lot of that play itself out. So meaning if we get a structural failure to the upside and we get taken out of this market, we're no longer looking to sell this market for the time being. We'll see if this market is able to create a structural failure to the upside or not. That's why we wanted to keep the stop losses very, very tight and concise. Okay, so if we get a close in this market above the 73.98, then we don't really want to be in this market anymore anyway. So we just have our stop loss just an extra pip above So that's our structural failure to the upside. So we're clearly getting a little bit of dollar weakness coming into these markets now. So that'll be interesting to see and to get some feedback. Once we find out that what Chair Powell is saying and what his approach is. And I suppose what's important to clarify, and there we go, we get the structural failure to the upside. So we'd expect to see a continuation of these moves to the upside. So for the last few days, we've seen these prices. This is a minute time frame. For the majority of the day, we've seen these prices. Sorry, let me go back. We've seen these prices move to the downside, and now we've had a really strong structural failure to the upside. So so what that means for now is we're not really interested in selling. This is a clearly defined structural failure, and prices are pushing higher, and a lot of this is very much as a reaction to the testimony of the Fed chair. Now, excuse me. So we've seen the markets create a structural failure and start pushing prices to the upside. So now we're going to let that market carry on. It's no longer moving in the direction in which we want to move it. So now this move is a little bit more counter trend. And if we see that price action play out across the other markets, which we're very close to doing so in the pound dollar, and also with the US oil, it's kind of reversing as well to the upside. And the gold market. So what we're experiencing is a little bit of choppy trading conditions. It's no major surprise really with the opportunities that we were identifying this morning, which were kind of few and far between. But let me show you why we're not interested in buying these markets. So if we look at the daily time frame, we're wanting to go with the market, which means for us, we're wanting to sell this market. Previously, 3 weeks ago, we were looking to buy the market for that reason. So we want to go with the prevailing winds. So we're currently, this is a structural failure to the upside. So we're no longer looking for opportunities to sell this market either. Same situation for the gold market, even though this is just quite choppy. If we had a pullback to the 1236, that would actually be fantastic for us, or if it moved anywhere between this range in here. So really right now is not the opportunity to sell, although we do expect this market lower over the shorter term. So looking across at the other dollar pairs, not much movement really. The Aussie dollar, is just extending lower, and we would still expect it to continue lower, but it's obviously going through a period where it is looking to extend to the upside. Strong 50% reversal in the New Zealand dollar, so we'd actually expect this lower eventually. The euro pound been strong, it hasn't really moved since we started the session. The euro yen is still looking strong, but we do have a potential level of resistance not too far away from the upside on that one. Pound yen not really doing an awful lot. Gold, we expect it lower. Very likely to get this market pushing lower. We're not just going to force the issue, so we will continue to look at these markets very carefully, and not an awful lot in the US equities either. A little bit of, in fact, there's been a turnaround really in the Nasdaq. So this is all-time highs up here at the 7,400 level, and we're just pushing back towards those levels now as we speak. So so the two or three markets that we'd be comfortable getting into to the upside would be the euro yen, the the gold market if it starts to settle down and it's not so volatile, and the oil markets as well. Let's see if we get a bit of a rollover to the downside. So we're still largely within this range, and this, it's important to identify the importance of that low. Sorry, let me look at it on the 15-minute time frame. So it does coincide with yesterday's low, and that's why we would be happy to look still for opportunities to sell at this level, because we are just at that level as we speak. So really, we'll call it a day there then. What we'll continue to do to look at is looking for an opportunity to sell the US oil, and looking for an opportunity to sell gold if those opportunities reveal themselves, and potentially even a buy trade in the euro yen. The dollar pairs, we'll monitor them as we go. There might still be another opportunity available in them, but we need to see price action behave in a way in which we're comfortable trading these markets in that way. So so that just about concludes then today's Trading the Markets Live. So you're very welcome to connect with us through our YouTube channel, and also through Facebook, Instagram, Twitter and LinkedIn, and the details are there currently up on the screen. Okay, so so all that's left for us to do now is to thank you very much for joining us. Please do like, share and subscribe this trading session, effectively the Trading the Markets Live, where we're looking for opportunities during the US Open. And also do click on the link below if you are interested in acquiring a comprehensive education in learning how to trade, not just through the actual education itself, although we've got many structured programs there for you, with learning resources and things of that nature for those of you that are keenly interested in learning this industry from the ground up, but also the live trade rooms that we offer every day, up to 5 different live trade rooms. Very, very comprehensive, and the best bit is it's incredibly affordable. We're currently offering a 14-day free trial. Please do click on the link even to see the actual recurring price per month on that, being able to access the wealth of education from us here at the Live Trade Room. So we're trying to do something fairly significant where it won't cost you anything at all. So do search the click on the link below, and we'll be more than happy to welcome you to the Live Trade Room, where we will be continuing this trading session through the Live Trade Room. So for those of you that could join us for that, we look forward to seeing you then. So so do enjoy the rest of your afternoon. We look forward to seeing you next time. For everyone here, take care. Bye bye. Bye for now.